Well, good afternoon, everyone, and thank you so much for taking time out of your days to join us for today's webinar on digitizing Miyasa economies. My name is Salman Jaffrey, and on behalf of the DIFC, I would like to welcome everyone who's attending, including my colleagues and panelists who will introduce themselves in more detail, but we have Paul Bryson from Virtuzone, Talal Tabah from Jibril, and of course my colleague Mohammed Al-Balushi from the DIFC. For I guess the first most important thing, even before housekeeping, is I wish everyone a Ramadan Kareem and Eid Mubarak in advance, and of course good health and safety and during these unprecedented times. I have mentioned some housekeeping, which let me reiterate. For the course of the next 57 minutes or so, we would like to ask our attendees to please keep their microphones on mute and their cameras off. There will be, of course, plenty of Q&A in the latter half of the discussion. And of course, there is a meeting chat column on the right-hand side where feel free to pitch in your questions as they come up. So without further ado, let's jump in. Today's conversation is a really interesting one. I'm very pleased to have our guests and panelists today. I think what we're going to do is, the good news is that I will only spend maybe 5 or 10 minutes providing a little bit of context on why is it important to talk about digitizing Miyasa. I'll set the stage, provide some context, and yes, there will be some slides, but I promise it'll be conversational and I won't dwell too long on the slides. But what I'm really keen on is to generate the discussion and get the expert opinions that we've all come here to see. After our introductory comments from myself and from Paul, we'll jump into a panel discussion with all three of us and look forward to today. A reminder on housekeeping again to please keep your cameras off and your microphones muted. I'm now going to jump into the presentation as soon as I get it right. Bear with me. And I believe that you should see it on your screens now. Super. Well, here we are. We have spent the better part of the last 6 weeks engaging in a number of conversations with our clients and our stakeholders because, you know, COVID or no COVID, it's really important to maintain our overarching objectives here in the DIFC and Dubai, which is to continue to talk about ways to drive economic growth. We're obviously not blind to the situation. Obviously, times have changed. There are a lot of very interesting and new developments. But I think our objective is to continue to talk about opportunities. One thing I will say that the conversation on digitization has always been important. It's particularly important because all of you, I'm sure, have noticed that the agenda to digitize business, front, middle, back office, stakeholder management, client engagement, that agenda has been compressed and accelerated, which is that we need to find different and better ways to operate and to drive business. And so today's conversation has particular importance. So over the next few minutes, I'll talk briefly about Miyasa, just a quick reminder, a primer on what it is, why it's important. I'll remind people, particularly for those of you who may not be from Dubai or dialing in from outside, you know, why Dubai is particularly interesting in this conversation. And then let's talk about the DIFC as an ecosystem, because I think that's where the digital story becomes really, really important and sets up conversations for our panelists as well. So look, we could spend hours talking about Miyasa, Middle East, Africa, South Asia, but really what we're talking about is four major things. We're talking about demographics, large urban population. We're talking about fast economic growth, generally speaking, notwithstanding recent events. We're talking about attractive markets, in particular financial services, which is interesting for fintech as well. And of course, digital. Now, what are your key messages here? The key messages here is that whether it is Miyasa or MENA, you are talking about being in the middle of, let's say, 400 million people if it's MENA, and 2 to 3 billion people if it's Miyasa. So clearly scale matters, eyeballs matter, people matter, because these are individuals who not only are large in numbers, but they're young, which means that they will continue to consume services and technologies and healthcare and education for the next 30 and 40 years. So that sets the stage for, why Miasa. The economies for emerging markets and growth, I think that story has been told relatively well. Even with the recent emerging market adjustments, it is obviously the case that relative to larger Western European, North American markets that are bigger and deeper, the growth here has been faster. Financial services continues to be very interesting. This is a region where corporate spreads and fees remain significantly higher than Western or traditional markets. That gap is narrowing, but this is still a good place to make attractive ROEs if you're a financial institution. And broadly speaking, that trend still continues. And last but not least, there is a high correlation between the youth that I've talked about and obviously digital penetration. And this ranges from all of us who live in Dubai and UAE are familiar with the at least minimum 2 handsets or digital mobile phones that each of us have. But it also pertains to the significant use of social media as a normal way to communicate and to exchange information. So put that together and Miasa becomes a very interesting conversation. I didn't even show these slides, so we'll skip this. The next question is, Dubai is a crossroads economy right in the middle of Miasa, right? So for the thought process here will be slightly repetitive to those of us who know Dubai well, but I think it's worth putting into context. Look, we're a gateway market, right? We're between East and West. We're between time zones. We have flights just about to everywhere, in the world. And again, hopefully when Emirates starts to restart in July, we will see that same coverage. But again, the reality is that is significant because it allows people to cover multiple markets. It allows people to get to places. We are a diversified economy. This is a place that's very progressive. The government has taken a top-down interest in ensuring innovation, digitization. The conditions for business success here are very important. The Dubai UAE takes investors and foreign business very seriously. Dubai and the UAE is ranked at the high end of all conceivable tables in terms of places to, being a good place to live, a good place to work, a good place to educate your kids, a good place for lifestyle. And really that's important because ultimately, whether you're a technologist or whether you're a financial services person, ultimately it's about talent, right? Our infrastructure is already well known, our roads, our bridges, our highways, things generally work here. And as a result, it's a great place to live. And I say that somewhat, smiling because people might laugh and say, well, it's a lifestyle play, what's going on? But really, ask yourself this question. As a top-notch kind of white-collar, knowledge-based worker, if you had a choice in this region, I would bet that Dubai would be very, very high on your list. And so let's close with the assertion that we're able to attract and retain talent, but it's a project that we continue to invest a significant amount of resources in. And so let me then transition to the part about technology. So I've talked about the tech-savvy nature of the population. I've talked about the youthful demographics. In the 3 years that we have pivoted aggressively towards the innovation agenda in financial services, which is just one piece of the puzzle, by the way. Fintechs, is where we started the conversation, and now it's a broader digital conversation. And again, these numbers will vary, and lots of caveats, but we've done a pretty good job here of aggregating. I mean, the secret sauce has been to aggregate talent and capital under the right regs, and that's what we've done. And we're starting to see the same patterns in fintech as well. We think there's north of 400 fintechs in the GCC, probably north of 200 in Dubai, and we have a significant portion of them. And that's a conversation which I'd love to get into with Belushi and the panelist. And so, if you summarize the opportunity and the place, what the DIFC does is what we're trying to do here is talking about an ecosystem, right? We want to be a competitive hub. We have all the advantages of a free zone, which I'm sure Paul can talk about, from taxation to laws and regs. We have an independent legal and regulatory system, which is very important for international firms when they make a choice to come here versus another place. The infrastructure I've talked about. And the last piece I think I want to pivot to is this real ambition to think about what's important for the future, which is the future of finance. Let me zip through a few other slides here. This slide simply tells you that We're blessed that we have the confidence of the leading firms in the world. They're comfortable being here. They're here. The platform works. That a lot of this has to do with having the right regulator. The list you saw on the previous page talks to regulations in banking and capital markets, which is really, really important. But we've tried to extend that to the innovation platform, and we were the first to develop a crowdfunding platform. We have incentives in place for technology, and now, of course, we have a new money services and payments platform, which we think is really, really very strong. And I hope we'll discuss it in the panel, of course. Let me just try and close the front section by giving you a flavor for. So if we think the opportunity is there for digital, which I've talked about because of demographics and because of market conditions, what is our approach? And our approach has been, we've tested and we've learned and we've adapted, right? So we have 4 or 5 pieces here. Obviously, we had the regs. So without the regs, we couldn't start the conversation. That was back in 3.5 years ago with crowdfunding, and that continues. But we decided to. The way to aggregate talent and capital is to promote and build scale. And so we launched the region's first accelerator. We've partnered with other business builders such as Startup Bootcamp. We have developed different types of licenses to drive people's interest here. We have a strategy on the future of finance, which ultimately aligns with an emerging Dubai level strategy that we have on making innovation a serious source of job creation for Dubai. And I can tell you that our $100 million fund is going to be scaled up to a $300 million fund at the Dubai level, probably by the end of this year. So we've taken this very seriously. A snapshot of some of the things. I mean, people that are in our ecosystem are raising money, right? 120 million bucks worth of. They're getting partnerships. They're doing POCs. Today we've accelerated over 85 firms, and we actually have 150 operating entities here. So we think that we're trying to walk the talk. We'll talk a little bit later about the innovation license. This is one mechanism by which we can allow regulated entities to come into the ecosystem. I think it's a very important way to test, because the innovation agenda is as much about testing and learning and adapting as it is about technology. Don't let anyone tell you that there's one solution that fits every region, right? Every region has unique situations, unique culture, unique regulations, unique business practices. And what we want to see here is that adaptation. Let me close with, as I transition over to Paul, with a summary and kind of statement of what we're really trying to do here. The DIFC was set up to drive economic growth in Dubai, to help diversification and to drive job growth. We did that really well with conventional financial services. And now the ambition is to do it with fintech, but also to the broader digital agenda, which means to enable the disruption of multiple industries using digital technologies. And that's what the future of finance really is about. The future of finance is envisioning, and this is a 3 to 4 year picture, an ecosystem that thinks digitally, that attracts digital talent, that keeps people here, that drives efficiency and drives scale, so that, at least from our perspective, Dubai gets the growth that it is accustomed to enjoying. So I'm going to stop there. I think that sets the stage nicely. What I'd like to do now is to pass the proverbial mic over, as it were, to Paul Bryson from Virtuzone, to tell the audience a little bit about what Virtuzone does and his views on today's conversation. Paul, if the line is clear, it's over to you.
Thank you very much, Salman. It's great to be on here. I'm having a bit of an issue with the camera, so we'll do this verbally, if you don't mind. So a little bit about us, what we do. I don't want to bore you too much with that. And then we're just going to look at why people should consider the DIFC when setting up their company. And more importantly, why people should consider the DIFC now when perhaps in the past they wouldn't have, nor would they have been able to set their business up there, because the DIFC have really diversified their product offering in the last 2 to 3 years. We've seen that quite a lot. So as I said, I'm Paul Bryson. I'm the Director of Structuring for Virtuzone. Virtuzone now is probably the largest corporate service provider in the UAE. We were founded around 11 years ago, purely doing company setups at that time in other Emirates, and have really grown our offering to cover all the Emirates, every free zone, and now it's becoming cross-border as well. So we're kind of branching into other countries. We recently expanded to Saudi 4 months ago. The office is not fully functioning, but it should be fairly soon. So we're looking at other markets as well here. Right now, we probably set up around 300 companies a month inside the UAE across all the Emirates. So, it's a pretty significant number. And we're completely impartial. We're not biased towards any particular jurisdiction. So when a client or a prospective client comes to see us about structuring and entering the market, we look at it with a complete blank canvas, and then we will kind of fit them into one or two solutions that really suit their needs. And as you said, Salman, earlier, there isn't one particular solution that fits every type of business. It's easy enough to just say, yeah, you should go to DIFC or perhaps consider another free zone, but you really have to drill down and know every detail and start thinking about exit plans for your business. What do you want to do in 5 years? It's all very good setting the company up now and what you need on day one, but what do you need in year 5? How do you want to get out of this? So you have to really look at that bigger picture when it comes to structuring and setting up the company. We're proud, to be partners of DIFC and to be a good aggregate producer of clients for you guys, and we obviously want to continue growing that business. For us, we've seen, as I said, a diversification in the DIFC's product offering in the last 2 to 3 years. It has always done a fantastic job when it comes to financial services, and over the last 8 to 10 years, I've assisted a few banks from other countries getting there, setting up the rep office, and a couple of law firms helping them structure in there as well. You really should consider the DIFC because it is a premier tier 1 financial jurisdiction across the world. Okay, it should be spoken about and is spoken about in the same breath as New York, London, Tokyo, Sydney, Toronto, Hong Kong. It is there. Okay, it's recognized globally, but I think the big selling point about the DIFC is the fact that it is a UK common law jurisdiction. And, foreign companies coming into this market do find Sharia law scary if they're not used to it. And Sharia law is fantastic for family law, but it's not the best when it comes to commercial law. Okay, so then having a UK common law system in place works for people from other countries when they're coming here to do business. The DIFC, as we know, is not governed by the UAE labour law, which can also be a little bit ambiguous as well. But it is a vibrant ecosystem. It's not all about finance anymore. It used to be. It really has grown out of that. Now, if you've got if you've got your Middle Eastern base in the DIFC, you can host people from your other offices. You never need to leave the DIFC because it is so vibrant. Now you've got some of the best hotels in Dubai are there, the best restaurants in Dubai are there, cafes, bars, gyms. You can find everything that you need in the DIFC now. You don't need to really leave it. So the thing that really we've found interesting over the last couple of years is the diversification away from financial services, which is always the core business of the DIFC. But the fact that that they have created this e-commerce platform, the innovation license, which we find is fantastic, and the FinTech Hive Accelerator, the Startup Bootcamp, and the Future of Finance ecosystem, all of this combined now shows that the DIFC has diversified away from its core model to have different offerings, and we can see that it is just growing arms and legs. The need to build the new avenue, the need to expand the size of the DIFC, it is becoming, it really is cementing its place as the premier free zone in the UAE. And I'm quite happy to move on to the panel session to start taking questions and talking about why we should look at the DIFC and perhaps what's happened. I mean, there's been some huge changes globally in the last 3 months where people have been forced into digitalization, whereas perhaps they would have gotten there eventually over a much longer period of time. But I think we see a lot of forced digitalization within the last 2 to 3 months, even in our business. So perhaps we could move on to the panel and then start talking through that.
Yeah. Salman, you're on mute. I'll take over. Good afternoon, everyone. This is Mohammed Al-Blushi, I'm the sector head of FinTech and Technology at the DIFC. Before I proceed, if I may ask all of you to turn off your cameras, because we still have some of us, their cameras are on. Great. So I'd like to start by giving the platform to Talal, just to kind of give us a quick snapshot about what he does and what his journey has been at the DIFC, because Talal in particular, I remember we met back in the beginning of 2017, and Talal has had quite a journey in the UAE since. So over to you, Talal.
Great, thanks for the kind introduction, Hamad. I think too kind. Basically, I used to live in the UAE, working for PwC, and then I moved to Switzerland, where Saudi, then to Switzerland, where I set up Gibran. I'm one of the co-founders of the company, and the idea was basically to use the transactional properties of cryptocurrencies and apply that to traditional financial assets. So basically, after setting up the company in Switzerland, we quickly realized that there's a huge market opportunity in the Middle East for several reasons, which I'll go through in just a bit. But basically, we wanted to move to the Middle East. And the clear choice was to move to Dubai and take part in the DIFC accelerator. Special shout out to Raja and Shireen for running such a great program. We were one of the companies that benefited a lot out of this. Initially, we wanted to do a regulated entity in the DIFC, and we ended up doing a tech license, which is something that if I told you, yeah, I'm setting up a tech company in DIFC in 2009, you would have said, like, what the hell are you talking about? Go to Dubai Internet City or go to some other free zone. But the reality is the overlap between technology and finance is not something that we can ignore. Mark Andreessen, one of, I guess, my role models and a partner at Andreessen Horowitz, one of the most successful VCs out there, famously said, software is eating up the world. That happened to media, communication, pretty much all industries in the past 10 years. But financial institutions are holding on to what they currently have, which is people's money and people's time and attention. And I think slowly but surely we'll see fintechs taking over, and we'll see banks that do have a clear digital agenda also be able to cement their positions. So yeah, I guess I moved from Switzerland to Dubai in 2017, and I've been very happy to settle in Dubai, beautiful city to live in, and we've had a great experience in DIFC so far.
Thank you, Talal, for that. I'll start probably with the panel discussion now. My first question would be something I think which is on all of our minds. What would be the future of work? I mean, would we continue working from home, or would we go back to our offices? How is it going to look like? So I'll start probably with Paul. Your views on this?
Thanks, Mohammed. Yeah, look, it's an interesting question actually, because it's something that even we've been discussing in-house over the last 2-3 weeks. I mean, we've got 110 staff, and we're in the Souk Al Bahar, right? So it's a prestigious location. It's not the cheapest place in Dubai to rent for sure. Do 110 staff need a desk in the office? Well, look, they do legally to have visas, right? We need to have space. Yeah, there's ways and means to do things. What we've noticed is we've got a business development team of around 17 people, and they've been very successful homeworking over the last 2 months. So, perhaps it's something that that we could look at and other companies could look at. Can you downsize a little bit? Have a few hot desks in place for these people should they wish to pop in and out of the office. They can do a lot of the work online via Zoom, via Microsoft Teams, and then perhaps if you need to get everyone together, you have either space in the office for that, or you can go and rent a meeting room in a hotel for a couple of hours every 2 or 3 weeks, kind of outsourcing that function, because you don't need to have wasted space in the office. So we see people moving away from it. We see clients come to us and ask when they're renewing, but the DED see this as well. So when clients are renewing their trade license, they come and say, look, we don't need an office space. Is there any way around this? The DED have given a new option for that. And during these times, they're allowing people to renew without an Ajari and a tenancy contract. And that's the first time I've ever seen that in 10 years. So they are accepting that perhaps there isn't a requirement for office and people can do everything remotely. I don't know how you guys feel about that. Perhaps, Talal, you have a kind of similar experience.
Yeah, actually, I have quite a strong opinion on the subject. Since we set up Jibril in 2017, we had some of the team in New York, some of the team in Russia, some of the team in Dubai. And the way that tech companies are structured require you to manage teams remotely. I recall my days at PwC, I always used to get a lot of stick from one of the partners about showing up late to work. I admit it's one of my weaknesses. I'm not that good at waking up early in the morning, but basically the relevance of this is today's staff are going to be judged by output, not by showing up to office at 8 a.m. and leaving at 6 and being physically there. So I guess the older generation or people who have used to work for the past 20, 30 years, a big part of how important a staff member is how often they are in office. They're always the first in, last out. This mentality is changing slowly but surely. I'd rather have one of my team members have insanely amazing output and then work 6 hours a day. For me, I'm judging the performance based on output. And I think that will even become even more important when companies start realizing the importance, or startups start realizing the importance of focusing on profit, right? I think the past, since 2008, we've been in some type of VC bubble where user growth is more important than anything. For that, you need to rent fancy offices to have this grand, let's say, look and feel. Where in reality, now companies are going to start looking at their cost base and thinking, okay, what can we save on? And one of the first to get hit is going to be real estate cost. And I think this is so there's the cost side and there's the quality of staff side. So let's say I wanted to hire out of a pool of people sitting in Dubai. I'm limited to people living in Dubai. Now I can hire someone that's living in Belarus, Lebanon, South America, as long as I'm able to manage them efficiently. And the way startups are set up is they have the ability of managing teams without physically seeing them. I was reading the other day, there's a CEO of a company in the US that just started their job, and imagine as a CEO, the standard traditional way is, I gather everyone in a room, tell them how work is going to happen. Well, that doesn't necessarily need to happen in a physical way. I do think that this is going to have, we're not going to work remotely full time. That's not going to happen, and that's too idealistic. People obviously forget, and we'll go back to a normal, which is a mix between Sunday to Thursday, 8 a.m. to 6 p.m. to this type of flexible work. And I think one unexpected benefit out of this is people are no longer late to meetings. Like, you no longer hear the excuse of, wallah, my Uber was late, or I was stuck in another meeting. You have a Zoom call at 12, you show up at 12. If you show up at 12:05, it's, if you show up at 12:10, people have already left. Whereas in traditional meetings, people are late 5-10 minutes at sometimes. I'm sometimes used to be guilty of that as well. I guess that's pretty much my thoughts. And final part, you cannot unlearn the digital process. Now, team leaders or managers or CEOs have had to learn the hard way that you need to manage your team remotely. you cannot unlearn this after everything goes back to semi-normal. So yeah, I do think that it's going to change the way work is done. And we've seen Twitter, for example, telling their staff, you can work remotely forever. What I actually have in mind for Jibril is we want to do 3 days in office, because it's very hard to build a culture when it's fully digital, right? Even though I like to count myself as part of the younger generation, I also think and agree with the concept or idea of creating a team culture that's based on physical and personal interactions. So yeah, the idea that we have in mind is Monday, Tuesday, Wednesday in office, and the rest is up to you. If you told me this when I was like second year university, that yeah, you'd have 4-day weekends that you don't have to get up, get dressed, put your tie on, go to office, yeah, I'd definitely take that. I'd definitely take the current situation, or not the current situation, but how office work is going to become in a year's time rather than how it was when I started my career.
Yeah, I think one of the key challenges for people would be to kind of have the mindset shift, because I was having a discussion with Salman yesterday, and I told them, we as human beings are used to waking up and going to office, and now you wake up, you don't have to go anywhere, and that is stressing out a lot of people. So, what are your thoughts on that? How do we kind of help people cope up with that?
Sorry, is that a question to me?
To both of you, yeah.
I think, look, there has to be some structure in place, but that structure is going to be much looser. Like I remember I used to get, I got a warning letter like my first month on the job with PwC, because I was late to office, but we had no meetings. We had like nothing to do, and I was expected to be there at 8 a.m. For me, that made absolutely no sense. If you talk to my dad about it, he'd say, yeah, this is just me being lazy. But the reality is that we'll see a combination between structure, but it's going to be much more flexible than what we saw in the past 20 years.
If I could just jump in and just add on what Talal said, I couldn't agree with you more, Talal. I've been saying this for a number of years. I find that perhaps in 5 or maybe 10 years, the concept of an office for even big companies will be a little bit redundant. They'll have a place where people can go and meet, but not something that you need to be in the door by 9 and stay in your seat until 6 o'clock, because I've always found that a little bit strange. If you can achieve your output, achieve a set KPI, then why not finish at 4 o'clock in the afternoon, or why not come at 10:30 the next day? If you can do it all, there's no issues. And what we've actually seen, perhaps we would have been a bit scared to do this, right? Because as human beings, we don't like going outside of our comfort zone. It's natural for us. But what we've seen a bit of a jump in productivity of staff, because if you think that, let's say, I said we set up around 300 companies a month. Now that number's a little bit less, during these times, but there's still loads of people setting up. Let's say one of our BD guys meets 3 clients a day, has to meet someone in the marina, someone in Business Bay, and then drive to Bird Dubai for the 3rd meeting. He's getting only 3 meetings done. He can't do anything else in between. It probably takes 5 or 6 hours of the working day. They can have 5, 6, maybe 7 meetings a day via Zoom or another platform, and still do their emails, their WhatsApp, and their phone calls all at the same time. We're actually getting much more out of people, and they're finding it productive, because the BD people are obviously commission-based a little bit as well, so they can make more money just by staying in the one place. But they wouldn't have done that before. We're kind of forced into that digital move.
Yeah. I mean, I had a question where we were to compare the differences between doing meetings over Zoom or Skype, or doing them face to face, and I think we've slightly touched upon them, which is not being late to meetings, or doing multiple meetings a day back to back. Any other points on that from anyone?
Yeah, two points is from my side. I also think that a lot of meetings can be emails, and COVID has showed us that, right? If there's a reason for back and forth discussion, then yeah, call for a meeting. But if there's no point for a meeting, just send an email. And I think Sadesh mentioned an important point on the Q&A, was what effect is this going to have on commercial real estate? So I think commercial real estate is going to get hit by like a double whammy, because retail is getting killed, and then office work is also getting a run for its money. But that's going to be not something that we see in the immediate future. And as humans, we'll always optimize in the long run. Initially, you'll have inefficiencies, but then whatever is a redundant commercial office will become something else that's useful. I don't have much concern there.
Yeah, I would also, sorry, am I muted still?
No, you're good.
No.
Okay. Yeah, I just want to, one observation I'd make is I agree with you. I think it's also forcing good innovation in terms of the utilization of the asset, to your point, right? So space is space. It's a blank canvas. It can be used differently. I think what we're trying to do is we're trying to balance the need. So at the DIFC, right, we're in this kind of unique situation where one of our unique value propositions is that we are not an offshore jurisdiction. And not being an offshore jurisdiction comes with, sure, some drawbacks, but a lot of benefits from a regulatory and compliance and fundraising perspective. And so, we are learning along with the market, and we've concluded that a couple of things are probably important. And by the way, Talal, it's you are telling us this. We learn from you. One is flexibility, right? It's not a question of whether you want big or small. It's you want what you want at a point in time, and you should be able to scale up or scale down quickly, right? There's no objective answer on big or small. It depends on what you need. So flexibility is really important, and we're trying to build that in. Number two is, on average, you're right. The all else being equal, the space requirement per entity is declining over time. That's just a reality, right? We're more productive with technology, and we can come in 3 days a week. So the footprint is changing, but we have a lot more volume. I think the third thing is, for people who are in your shoes or even outside of Dubai, oftentimes it's proximity to client as much as physical space. I remember when I was with a global management consulting other than PwC many years ago, we used to hotel. So we would come in, check in, use the space, and leave. But the choice of offices was a function of where the clients were. So there is some link, I think, and I think we need, we're in the process of developing new flexible space in the DIFC, and I think we continue to learn a lot from clients like Jibril and Talal.
Great. Thank you for that. I think I'll now pivot into a different kind of genre of questions. Now, this is about digitizing and having kind of showcasing the IFC and Dubai as the tech hub. How do you guys see Corona going to change the investment landscape? Because investment, as you know, is one of the key elements for startups to scale, and due to COVID, that has been affected. So comments on that? Talal, that's for you. Yeah.
Okay, I think the investment landscape is definitely favoring more liquid assets than illiquid assets today. If you think of the lockup period or the average hold for venture investments or even private equity, it's not really the same as a publicly listed ETF or stock. But as we all know, and I know this has been talked about a lot, but the best companies are created in downturns, whether it's General Electric or whether it's Uber, Facebook. We saw a lot of what we're using today was created in the 2008 crash. And that was a specific type of company, what's, I guess, known as the sharing economy. And what we're going to see because of COVID is we're going to see investments gravitating towards health tech, food tech, fintech, ed tech. I guess one of my favorite startups is my cousin founded, called Abwab, which is an online learning platform for school students to change the way private tutoring happens, for example. So there's a lot of inefficient markets that will be forced to change because of this. So humans are generally lazy and don't like to change. When they're faced with something like Corona, they're forced to change. And companies that solve real world problems and have a real pain point that they're addressing, we're going to see investments going into those. So one other thing that is an indirect effect of COVID is governments around the world and central banks around the world have been following the US's lead to drop interest rates. And what that usually leads to is lower returns on fixed income and essentially more credit availability. So a lot of that will go towards scalable startups that have a focus on profitability. Because I do think that the VC bubble will be somewhat challenged, where you just burn cash to raise the next round, burn cash, grow user base. So I do think the investment landscape will change a lot. And that's not even discussing what the effects of currency debasement is going to have. So yeah, we're in for an interesting coming 5 years.
Do we anticipate any slowdown in terms of capital deployment in the current times?
So it depends who you're talking about, right? If you're talking about an angel investor, of course you're going to see slowdown, because an angel investor is investing their own money that they earned from their investment, salary, etc. So we're seeing a lot of wait and see until valuations somewhat get a reality check. Whereas VCs that are on the clock to deploy their capital will have to invest, because otherwise they can't raise their next fund. So it really depends. Family offices operate in a completely different way. And I think that we're going to see a lot of corporate VC action in the coming years. Because just think of all right, I'll give you an example of what I think is a great opportunity, which is Addenda, an insurtech company. So as an insurance company, whether it's one of the larger ones in the UAE or the world, they're realizing that they're getting challenged when it comes to their profitability, growth, etc. So as a hedge, they're going to end up investing in insurtech startups so that in case these become the market leaders, they have some of the upside. So to answer your point, in the short term, we will see a drop definitely in deployment from people who are investing their own money, and not necessarily from entities that are VCs, for example, that want to raise their next round. So the incentive structure of VCs means that they can't afford to not accept deals or not deploy capital in the coming year. I'm sure you've seen, like, after COVID hit, a lot of VCs said, yeah, we're open for business, which is great, but they're doing that out of necessity. Because if they don't, that means they're doomed as a VC. We will see definitely short term, we'll see less capital invested, but over the medium term, as I mentioned earlier, the best startups are created out of hard times. There's an Arabic saying that says "Al-Haja al-Ikhtira'," which means necessity is the mother of innovation. And now it's necessary to improve our current processes. So that's my 2 cents.
And if we were to move away from VCs and angel investors, even at Virtuzone, what we're seeing is people that perhaps are on a 50% salary cut or have had their salary stopped completely right now. They're throwing the dice. They're setting up a very small basic company to out of necessity, because they have a product or service that they've thought about creating but didn't want to leave the comfortable lifestyle of having a nice salary every single month. So now these people are forced to do that. They're doing it. Some will be successful and some won't. And as Talal said, the most successful companies are the ones that come out of this by solving a real problem. And we're starting to see some clients come through the door and we think, God, you know what? That is a brilliant idea. You're going to do well here.
Great. I'll probably jump on to my next question, which is about what would be a post-COVID economy look like? What are the things that we see being ready to be disrupted? To any one of you.
Well, I can jump in. I mean, I would say that Talal said earlier as well that, as human beings, we're kind of lazy often, and we're kind of comfortable in what we've got. And I would say that I'm very much the epitome of that, right? So once I'm set in my ways, I don't really like to change it. But then once I'm forced into a change, whether that be at work or at home, then I really start to kind of get into a little bit more, or start to kind of use it. So, but what we've seen is traditionally, right? Now the DIFC have always had a really good online platform, but let's say we work with other government bodies and free zones who do not and have been pure paper businesses, right? And I would say that Dubai courts and the DED are good examples of that, whereby we had a lot of paper documents, we had to go and see them when applying to set up a company, renew a license, execute the memorandum for the company. Whereas now, they've been forced, in order to sustain their living and sustain the business, they've been forced to change, right? Because otherwise, DIFC and other free zones who are fully digital can sweep up a lot of that business that they would have got. So we're seeing that traditionally, right, the most antiquated methods that we would have used in the past when executing documents at other government bodies have been forced digitally. We're seeing people from Dubai courts coming to us with an iPad to get a signature, rather than me having to go to a notary public and take a token and sit there for 40 minutes to wait to get served, and then to be rejected, right? And then having to go and have a document notarized, translated again because there was a problem with it. All of this can be done online now, and very, very quickly. But again, that's something that perhaps would never have been considered in the past had we not been forced into that position. So we're seeing that traditional paper business is very much becoming digital because it's forced.
Yeah. Any other views?
I mean, I would say, Mohammed, I would simply say that, look, there's a lot of speculation on what's happening, what the impact, long-term impact of COVID is going to be. It's clear there's a short-term and a long-term. I mean, medium, long-term, honestly, it's very difficult to speculate. Short-term, what we're observing regionally and globally, obviously, is heavy consumer consumer, high-touch and travel related sectors are obviously significantly impacted. So hospitality, aviation, hotels, restaurants. These are all industries that obviously are taking a significant impact. And the question really is twofold, right? It's not what's going to happen in 12 months. It's what new trends are going to emerge, what new problems are going to have to be solved to get them back up to resilience. So, for example, I like Dalal's observation that adversity produces new business models. It's very simple because you have to solve new problems. So the question is, you have a thriving restaurant business, but you can only operate at 50%. How do you do it? Okay, so then you solve for it. You have an airline where you have to rebuild consumer confidence. How do you do it? Some of it's technology, some of it's configuration, some of it's routing, some of it's health checks. So I think if we can get through the next, 3 to 6 months, which are going to be quite impactful globally, I still remain an optimist. I think a lot of really interesting innovations are going to come out. Here's another example. In the US, there has never been the launch of any kind of new drug with FDA approval in less than 8, 10, 12, 15 years. There's no way that we're not going to have a vaccine in 12 or 18 months, right? Now, that's still a long time. There's a lot of pain there. But imagine, right, you've compressed the innovation cycle for something from 5, 10, 15 years to 12 months, right? So you have to start to look at the world that way, and we're all going to have to adapt.
Okay, thank you for that, Salman. We're a bit short on time, so I have a long list of questions. I'll probably do one last discussion point, and then we can take some more questions from the attendees. Dubai, of course, is the hub of technology for the Middle East and North Africa markets, I would say. How do we see Dubai's role as being a tech hub evolving? Because I have a gut feeling, and I keep telling Salman and the rest of the team, and I find myself lucky also being in the space, I feel there will be a huge growth in terms of tech startups or technology companies being formed. But I'd love to know your views. Talal.
Okay, so in order for Dubai to cement its position, or for the UAE to cement its position as the tech hub of the Middle East, the most important part of being a tech hub is technical capabilities. So that's definitely an area that requires a lot of work. And there's two ways you could do that. One, attract foreign talent, which is something that Dubai has done tremendously well over the past couple of years. I'm not an Emirati, and I've been happily living here just so that many other people have developed careers and have, like, Dubai has successfully been able to attract foreign talent for multiple reasons. Or you have homegrown talent, and that's done through initiatives like Sheikh Mohammed bin Rashid's initiative to do 1 million developers, for example. So I think Dubai and the UAE in general are on the right track of making sure that there's a technical development community, because companies, that is part of the requirement of becoming a tech hub. But actually today, that is not a direct prerequisite. Although it helps, there is a very good case of, so a lot of companies here use developers sitting in Jordan, sitting in India, sitting in Russia, because it's cheaper. So I guess to sum up my point, the UAE has to continue working on attracting technical talent and making sure that there's stability around regulations. Like when I see Saudi Arabia raising VAT from 5% to 15% overnight, that's definitely not something that will help foreign direct investment, because the most important thing is the stability of regulations. So, and I think DIFC have been, and the UAE in general have been very good at that. They don't act in haphazard ways, launching a regulation and then changing it 6 months after. They really take their time, and sometimes it's better not to regulate than to put haphazard regulations. So yeah, I think these are my main 2 points on that. So stability is very important.
Paul, any views on that?
Well, Talal touched on attracting foreign talent, and I've been here almost 10 years, and what I have seen is I was recruited from abroad to come here. And I think that now Dubai has done a great job in already attracting the talent. So if you're setting up here, perhaps not technical talent, but the talent pool is already here, whereas 10 years ago it wasn't, 20 years ago it definitely wasn't. Companies would fly people here just for an interview. They would pay their DIWA bill and everything on top of the salary, right? So we find now that it is a place where you're finding the talent already here without the need to go abroad. It is no longer a chore for people to come and work in Dubai. It is a pleasure for people to be here and work here.
Great. Thank you for that. I think we've got 5 minutes left. We have a few questions from the floor. Salman, if I may direct a few of them towards you. So there's a question about the DIFC FinTech Fund. If you can,
So thank you. There are a whole bunch of questions. Mohammed and I in the panel will try and get through as many of these as possible. On the FinTech Fund, this is a question from one of our colleagues, MEVP. Obviously, the $100 million fund has been in place on a co-investment basis. A number of checks have been written. The overarching philosophy initially was to focus on technologies or solutions that solve specific problems for the DIFC or Dubai or the region. So naturally, these were in the RegTech payment space. But per His Highness Sheikh Mohammed's announcement in January for a Dubai Future District level fund, we're in the process of working to consolidate that billion dirham fund. So can't give you much more details on that, but expect that announcements later on. Do you want me to run through the questions, or are you doing it?
I think there was another question about cryptocurrencies, UAE having regulations about cryptocurrencies. I think,
Yeah, I mean, look, Talal can also tag team on this. The UAE and DIFC, we have a good, constructive, positive view on digital ledger technologies and the use cases. I think the use cases are widespread, particularly, at least for as far as we're concerned, for KYC, AML, RegTech, as well as tokenization. The cryptocurrency issue is obviously a bigger global one. My own personal opinion is that we have other market efficiencies that we have to solve before we need to solve for a currency one. That's my personal opinion. The formal view of the UAE is, as far as I can tell, is that there is significant caution on any new views on cryptocurrency. So as far as I can tell, that use case for DLT is going to go real slow. I don't know if Talal has a view, but
I'm obviously a very big supporter of crypto, so I'm saying this with I'm not being very objective. I'm very biased. But basically, what it doesn't make sense for DIFC to regulate it as long as the central bank of the UAE don't have a clear stance, right?
correct.
I mean, just like many other regulations that the DIFC have, it has to be aligned to the federal regulator, or else you're going to have this kind of ambiguity. And then, so for example, what's been done in Bahrain is quite smart, because the central bank, which is federal, also licensed crypto exchanges or crypto businesses in general. So I personally think that whether crypto is regulated or not, people are going to use it. It's just government's decision whether they want to be part of it or not.
Yeah, so I think you're spot on. I would just play devil's advocate and say it'll be interesting to see what Calibra's recent retrenchment implies for what participants really feel about short term versus medium term. I mean, I think personally, I think you're right. I think eventually it's going to happen. Eventually. But again, I'm not a technologist, and I love having evangelists like yourself because it allows us to push the boundaries of our imagination. But from my kind of non-innovative imagination, there are so many other things that we're solving for that I think it'll be interesting for regulators to kind of juggle. But I take your point.
Yeah. I think we have time for one last question, Salman. It's almost one. There's a question about emergence of technology with 5G coming in and Dubai having plans. How does DIFC kind of fit in that plan? So.
Yeah, look, we're not technologists, so we're agnostic to technology. Our job is to enable and support. So we hope that smart people and enablers like Paul and Talal will bring us the companies, bring us the people who invest and do these technologies, and we'll support it. We don't have I'm not authorized to provide any formal view on tech platforms. There was one more question on DIFC versus Media City. DIFC is a financial free zone, so we have our own English common law based regulations and courts, and so it's a very different proposition from Dubai Media City. Do we have time for one more?
I think it's almost one, so it's one actually. Yeah.
There was a question on ambition, global versus regional. I can assure you the ambitions are global. Our rankings are global, both in as a financial center and as a fintech hub. Our firms are global, but I think we do regional. We have a very strong ambition to be relevant for our region as well, simply because the region has a large youthful population and the growth potential is significant.
Great. I think it's a wrap. Thank you, everyone. Thank you for attending. Thank you for our panelists, Talal and Paul. Thank you for participating. Thank you, Salman.
Thanks.
Thanks for your time, guys.
Thank you.
Thank you, Paul. Thank you, Talal. Really appreciate it. Thank you, Mohammed Al-Blushi. Best wishes to everybody.
Thank you.